A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about utility stocks and ETFs, which are benefiting from the huge demand for power by AI related applications. So, earnings were front and center last week because tech giants Apple, Amazon, Alphabet, Microsoft, and Meta, they reported their quarterly results. So, five out of the seven Mag 7 stocks. And the biggest takeaway was that the AI story is not slowing down anytime soon. So, this AI boom has driven a surge in demand for data center capacity to handle AI workloads and store the vast amounts of data that they require. And Google, Amazon, Meta, and Microsoft, the four hyperscalers, they are projected to spend more than $350 billion on data centers this year, and then more than 500 billion or even more in 2026. And these data centers are massive, massive energy consumers. AI applications require much more power than traditional computing. So, according to S&P Global, uh, the rapid expansion of data centers that could require 22% more grid power by the end of 2025 than a year earlier, and about three times as much as by 2030. And according to the Wall Street Journal, data center consumed less than 2% of US electricity before 2020, and but by 2028 they could use as much as 12%. So that is the reason why stocks like power producers like Vistra, Constellation Energy, and NRG Energy, they have surged because they stand to benefit from this massive growth in electricity demand driven by data centers. And utilities is actually the third best performing sector in 2025, behind only technology and communication services. Now, those two sectors, tech and communication services, they are AI beneficiaries. The Mac 7 stocks, they are majority, they get majority of allocations in these two sectors. And utilities, in fact, gained more than 19% in 2024, again due to AI. So traditionally, utilities are known for their defensive nature and steady dividends, and historically, they have outperformed when the broader market slows down. So, during economic slowdowns, because electricity remains essential even in challenging environments. So, this sector had beat the broader indexes during the dot-com bubble burst in 2000, then during the global financial crisis in 2007 and 2008, and then again in 2022 when all the major indexes had terrible performance. Now, the sector could also benefit from lower interest rates because the Fed has already cut rates twice and could cut even more in the coming months. Then we could see increased M&A activity, and there's a lot of interest from private equity and infrastructure funds. So that could also present future tailwinds for this sector. Now let's take a look at ETFs. So the first one I'm highlighting is by State Street. The ticker symbol is XLU. This is the most popular product in the space, market cap weighted, ultra cheap with an expense ratio of just 8 basis points and 22.5 billion in assets, 33 holdings. If you want to learn more about this ETF, you can go to the quote page on Zacks.com. You can read our research report, articles, and nice dividend yield for this ETF because the sector is known for its dividends as well. Then, using the link, you can go to State Street webpage for this ETF, and you can take a look at what it does. And in terms of holdings, NextEra Energy, Constellation, Southern Company, Duke Energy, these are the top holdings in this ETF. Now, there are three more ETFs which kind of track similar indexes and they are passively managed. You will get similar kind of experience by owning these ETFs as well: VPU, FUTY, and IDU. FUTY is the cheapest, same expense ratio as XLU. So these are the three ETFs, and I'll quickly go to the quote pages. So this is the Vanguard Utilities ETFs, BPU. This is by Fidelity, FUTY, and this is the iShares IDU. You will see that they have similar holdings, and again, even the performance will be similar. Now, the next ETF, which I'm highlighting, it is somewhat different. This is actively managed, and this is the top performing product last year and this year as well. In full disclosure, I own it in the ETF investor portfolio that I manage. Now it has about 1.3 billion in assets, slightly pricey because of its active management, 49 basis points. And again, you can go to the quote page on Zacks.com. I also did a podcast with the manager of the fund. You can listen to the podcast using the link. You can go to the web page, which is Reeves Utilities ETFs, and you will see that holdings are somewhat different, but similar holdings: Vistra, Constellation, Talon. These are the top holdings in this ETF. You get a concentrated portfolio with the top three holdings accounting for almost 40% of the portfolio. Now, on the next slide, I have the comparative performance versus the S&P 500 index. And now the actively managed product yields, that's up about 32% this year. The other four ETFs that we talked about, XLU, VPU, FUTY, those are up between 18 and 21%, and the S&P 500 index is up a little more than 17% year to date. Thanks for watching. Make sure to check out zax.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.